Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Friday, everybody. Great to see you all. Got the rocking the Java there. I got my Viking, got the Viking mug action today. Great to see everyone. And we're kicking off the morning with one, remembering it's Friday and not to undo any of the good works that we've done throughout the week. Remember, the end of something is more difficult to trade generally than the beginning of something. End of the day, end of the week, end of the month, end of the quarter, end of the year. So the end of something has a distinctly different psychology than the beginning. So I always keep that in mind on Friday. And then we want to take a look at the economic calendar, which you have here in front of you. And you'll notice we have the JOLTS job openings at 10 a.m. Now you'll notice it's not a red hot zone. It's an impact event, but knowing that the Federal Reserve has this fifth pillar right now in terms of the four pillars of macro, a dual mandate, just jobs are important. And if jobs are important, data like that could potentially move the market. Now, the timing on this is interesting because it's right at the end of the clearing. So we get the bell rings, we have that clearing period, we get that clearing or opening range. And then right at the top of the hour, where I'm usually looking at having the clearing range behind us and sort of getting to work, we have this data. So remember, there's going to be some volatility. We have Williams at 10 after 12 Eastern. So we have some hot zones today. And this currency report is tentative. So remember, if I don't have a specific time, but I know it's sort of looming over the market, that could be interesting as well. So it's just going to make for a more interesting Friday. All right, great to see everyone and happy Friday. All right, so let's kick it off with some questions here. So if you've already typed them in, terrific. I'm just going to start at the top of the list and move down. And starting with Debbie. Hey, Debbie. The question here is, are RTX for long or are we in chop? So the JT multi says we're in chop, but the trend that preceded the chop is up. So with that here, you can see the lower JT multi is yellow, but before we went choppy, we had a nice uptrend. So I'm going to have more bullish bias, but I still have to treat it as what it is, which is the chop. And I have to acknowledge where the bottom of the range is, where the potential top of the range is. And I really want to, so this is the way I've always phrased it. Your edge is at the edge. Your advantage is at the edge in chop. So the more we creep into overbought, the more we creep down into oversold, the more the market inches into that zone one way or the other. Oh, that's where the opportunity is. But the more preferable side of the trade will be right here along this point of control, and the lower end of the range, which is the buy side of the range, because again, the previous trend was up and my directional bias is bullish. So I would treat it as chop. Yeah, I would treat it as chop and focus on a fade. Now, to your point, you mentioned ITA and XLI. Love it. You're looking at the boats in the tide. Perfect. And then what I would say is take a look, and I'm sure you've already done this, take a look at the other names within those sector ETFs and then say, hey, is there relative outperformance in any other name, or is RTX as good as it gets? All right, so good stuff. Appreciate that. Do we have a new entry point on XLE? Yeah, we're not there yet, but I'll definitely be keeping an eye on it. We're not there yet. I'll keep an eye on the Darvis. I'll keep an eye on the wave, but I definitely want to be long when this thing pulls back. I don't see that happening before probably 57 and change. So yeah, I do want to get long again. Absolutely, Michael. Is the CL trade from my notes valid for the sector room? Well, if you have the notes, if you're in one of the rooms where I do send out the notes on any given day, then yes, yes. So I do like the idea of being long crude oil. In fact, we did a free video on crude, I believe this week, available at the Simpler Trading YouTube channel. And so, yeah, I do like the long. I sure won't short it. So, yes, it is valid if it's in the notes. Now, remember, some trends, and I would still call this loosely a trend, some trends are really going to be ruled by more dynamic levels, meaning they're not static, they're not horizontal levels, they're not fixed, they're moving. So the zone could change a little bit session after session. Usually it's going to be a fairly minor change, but yeah, I'm still looking at the long position, absolutely, on crude. And by the way, that's a lot of the reason that I like the long position on oil stocks. All right, next up, question and comment. Okay, so the question is my thoughts on pound New Zealand. Okay, let's start with pulling that up. So when it comes to pound New Zealand, one of the things I would say is make sure you start with contrast. So I'm going to head on over here to FinViz, right? The FinViz website. And I want to look a little further out in the relative outperformance. So I'll look at month to date, quarter. And I just want to make sure that the two symbols that I'm looking at, here's the pound and here's the New Zealand dollar, have adequate contrast. And I think they do. That's pretty good contrast. It's a pretty good separation between the two currencies. And then I want to make sure that the trend is reflective of that. And is this trend reflective of long New Zealand dollar? Remember, it was a strength story, and short pound. Double red syncs with the contrast. So it's a short the rip. It's a short the rip. The comment is, so Tom, when we get a higher high, take a look at the 21 propulsion and into the wave. Yeah. Comment, planning on purchasing my ultimate day trading class. Oh, very cool. Need the ETF and futures and Forex skill mix. Thank you for all you do. Tom, you know, we're going into the end of November. We're probably just a couple weeks away from our Black Friday, Cyber Monday, and whatever else. You know, I don't know. I think at some point, just we're going to have all, you know, when I look at the retail environment right now, apart from what we're doing at Simpler, it's interesting. Black Friday, Cyber Monday is turning into day after Halloween sales. I got all sorts of, you know, Black Friday is just getting, you know, before we know it, it's just going to be an October, November thing. Anyway, yeah, be sure to keep an eye out for those sales because we usually do have some terrific sales this time of year. So if I can save y'all a few bucks to put into your accounts to trade with and get educated, I'm all for that. So that's great. Next up is HLT for a possible entry in the zone. Absolutely. Hilton, sure. Furman, good eye, double green, pull back into the wave. We've done it a couple times. This will be the third time that I can see we've either hit the 21 wave. Now, we want to be aware of, nope, we're good. I like it. I like it a lot. So buy the dip, absolutely. And as we sink into the wave, remember, I don't believe in a single magical unicorn of a level. It's always a zone. It's like a safety net. You know, the market's falling into this nice fluffy pillow. And so there's going to be some give. So don't be surprised if it sinks a little bit lower, as it did last time, to the middle line of the wave before it rebounds. Good stuff, though, no doubt. I like it a lot. All right, next up, is the crude oil uptrend over? Joel, I don't believe so. It just, well, now let's get more specific. I think there's two questions. Let's unpack it this way. Is crude oil still buyable, right? Is it still buyable? Yes, it is still buyable. Is it an uptrend? It's actually flirting with a little bit more chop. but it is buyable. So technically, by my very own tools, the trend doesn't have the same swagger that it has had just even at the beginning of this month, but it's still buyable. So we just readjust what our buy zone would be to acknowledge the chop that this overall bullish bias is in. So every trend will have bullish or bearish bias, uptrend, downtrend. It's going to have that bias. But every market that has bias doesn't necessarily have a trend. Bias just means there is still a path of least resistance. The structure of the market may not be how I would define a great high quality trend, but we're still clear on what we want to do. So yeah, I think the trend has segued to a little bit more chop. It's a weaker trend, but it's not a downtrend. So I still think it's buyable. Absolutely. All right. And I still am looking for higher highs at some point. We just need this double green to stick around. But I definitely want to buy this market. Absolutely. All right. Next up is Freeport McMoran. All right. So rolling. Train has left the station. It's looking really good. It's a long position that we have in my sector, folks. Is we have the live trading going on. I'm positive we're in this in sector. So we set this up on the 4th. Does that sound about right? I'm looking at the candles. I mean, I can look at the candles and say, oh, blue graph candle sunk into the wave. And there is the opportunity. 4th, 5th, beautiful. That's the window of opportunity. It's very specific. And then today, no, yeah, today it's, hey, I love it. I love where it's heading, but there's no trade there for me. We're already in. And, look, I think there was another opportunity here, right? So what do I think of Freeport McMoran? I think I like it a lot because I'm already in it. If you like, so this is, let me put it this way, because I don't want to be salt in a wound. Rog, that doesn't help me much. You don't want to get in it today. No. But here's the thing to remember. If you like momentum, I do not, right? Some people like chocolate ice cream. Some people like vanilla, but ice cream is awesome, right? If you're trading, however you're trading, it's awesome. But please know when you're here in Charts and Coffee, we are looking at the markets from an exhaustion standpoint. We're asking ourselves, where is support? If you're more wired to ask yourself, where is resistance breaking where I can get long, then you're a momentum trader. And frankly, I don't like to trade that way. It's never really resonated with me. But that X marks the spot, that's what you're looking for. That breakout to get long. So Freeport McMoran, love it. And so, Hal, I know I saw your price there, 37 and a half. So we have another trader here, 37 and a half. Love it. So that's the difference. Great eye for looking at Freeport, both of you. And Hal, you got it. That's just pretty much classic, 37 and a half is actually you got a really good fill. Very nice. And that would have been on the 10th. So excellent. And so let's enjoy this elevator ride up. All right. Nikolai says, love Sector Secrets going on the 2nd year. Yeah, Nikolai, it's true. Thank you for reminding me. When Trish and I were trying to figure out what Sector Secrets was ultimately going to be, and that was November of 2020. So we're now 1 full year of Sector Secrets, which has been great. And it's changed, meaning, how we're doing things and the way that we're explaining the trades and the alerts and everything. It's continually evolving, which is to say there's things that I can be doing to make the service better. And Trisha's making sure that I do that. And hopefully as we go into the 2nd year, that's exactly the path that we will continue to take, Q&A sessions so everyone understands our position, Q&A sessions to tackle some of the tech and indicator questions, our weekly sessions where we get together and do a little day trading, and also our end of day setups, the notes, yeah, we're gonna, so I'm really looking forward to what this second year is gonna look like because the first year has been pretty awesome, I have to say. So I really appreciate y'all going along for the ride with us and our growing group over there. Lucid. Lucid for a squeeze. Hmm. Um, okay. So let me just quickly lay out how I was taught the squeeze by the guy who created the squeeze. So some of you might have heard this story if you've been in the chat rooms. And so this would have been right around the time of my first book, '06 maybe, '05. I can't remember, early 2000s. John Carter is invited to speak at a local investing group. I used to speak at that one a lot too, but I knew of John because we wrote for a similar website. We're both contributing content to a similar website, and I was just a fan of how he traded. So he was in the area, so I thought, oh, I'm going to right down the street and go check out what he has to say. And so get there, the place is packed. John had a great following, has a great following, but they even then had a big following. Place is packed, and you realize right away he's not a guy who's going to self-promote. He was very humble, and he just wanted to look at some charts and indicators together. And it was a very cool, relaxed environment. It was a trader talking to traders, which if you've been to expos, it doesn't always feel that way. So right away, I liked the guy. And two things popped into my mind. One, boy, is he cute. And two, he's decoded momentum trading. And so the squeeze for me was quite literally a compressed market. That's the way he talked about it. We'd see back then the squeeze wasn't automated. It was the old school squeeze. And you'd see all the indicators sort of compress and then explode. So for me, I went home and looked at my tools through this paradigm of how can I recognize Bollinger Bands, Keltners, how can I recognize where the markets are compressing? Well, for me, that was blue grab candles, right? So we're going to take other people's work and then we're going to see how it sort of fits in to our work. And for me, it was very much, do I have blue grab candles? And then do I have a squeeze corresponding with it? Is it in sync with what I visually am attuned to looking at for a compressed market? Having said that, realize that my execution of this idea that John created is very different. Okay, it doesn't invalidate someone else's squeeze. So I just want to make sure I lay that foundation really firmly. This is not a squeeze environment for me. This is an uptrend, right? I don't want to be buying breakouts in uptrends. I want to look at when a market is compressing, perhaps taking a breather, giving me blue grab candles in an uptrend, and then using the squeeze to decode the momentum. Now, what do I mean by decoding momentum? We've all probably played that sadistic game as a child. This was clearly invented by some probably slightly inebriated parents at probably a 4-year-old's birthday party. They said, let's play music and make these kids march around chairs and let's cut the music and watch them all scramble to get their butts in a chair. That was and I played that game. That was our introduction to mosh pits. It was a mosh pit of 4-year-olds, but that's momentum trading. If you were playing musical chairs and you knew a second before the music was going to cut, what could you do? You get your butt in the chair. So imagine momentum trading really being a game of musical chairs. You want to take advantage of that mad dash. That's what momentum is. But you need that little heads up before everybody else is going for those chairs. That's the squeeze for me. So if I don't see that musical chairs game going on, that's compression in this slightly insane analogy, then I don't have a squeeze. So I hope that makes sense. It's not just lucid, but it's anytime I'm looking for a compressed market to break out. All right. This is a trend. This is a trend. And if you like the trend, you play the pullback. And that was the 10th, right? That's what I'll look at. So as soon as this thing goes double green, the pullbacks are viable. And that's what I'll focus on there. So I don't want to be buying a higher high within the context of not just a double green market, but a parabolic one at that. But sometimes the fact that it's parabolic will let us sort of be able to take advantage of a breakout of that nature. Okay. So I hope that makes sense. Yeah. For a lot of you said yes, it was a slow grind. Bank holiday, right? Bank holiday, Veterans Day. And so, yeah, it by around 10:15, you could, the lethargy was absolutely something that you could see and feel. And we pretty much started to shut it down. Yeah. Okay, I'm gonna take one more question and then wrap it up. And that's Apple. I like Apple, but I don't. So this is once again structure, right? Just the conversation about the squeeze before was about structure. This is a sideways market. This is not a trending market. If I don't have a double green, I've got to be far more conservative about the zone that I want to get long in. We're actually in the zone now. That zone starts at about 147.80 down to 146.55. You want to enter Apple, do it in that zone. Treat it like a choppy market, bullish biased fade. Getting in any earlier than that is just going to get you in at probably a level where you'll have to accept some heat as the market dips. But if you know this, and you would because of structure, if you know this, then why not wait for that better zone? And I think we're hitting that zone. We hit it yesterday. I think we're in it today. It's going to extend all the way down to 146.5. This is where I would want to feel, look for that call vertical or look for those long calls. All right. And just like that, I am out of time as always. Thanks so much for all the questions. I really appreciate it. And I will see you all on Monday. All right. So I will, I'm going to head on over and hop into the sector room. I won't be on the mic, but I'm just going to take a look at some of the questions. We're going to manage some of our open positions. Definitely a Freeport McMoran. We need a target 2 on that one. And our dollar trade's been doing really, really well. So we're going to manage some winners on a Friday. That's the way we like to end a week. Great to have you all here. Be good to each other. I'll see you next week.